All right, we are connected for the Friday edition of the Morning Check-In. And as always, looking forward to connecting, sharing my 2 cents on a variety of subject matter, and more importantly, keeping you up to date on what's more important, and it happens to be surrounding gold. Gold is exposing this inflation narrative and the PCE, even the Federal Reserve's own primary metric for determining the cost of increase of goods and services, it's ticking up. And so September is going to be kind of hard to cut into something that you know is becoming a problem. And of course, that's consumer prices, which will always be a problem because inflation in and of itself is the expansion of the monetary base. So the more currency, the greater the cost. But we're going to talk about that and a lot of other things. But before I move forward, as always, for those who might be checking in for the first time, you never know, I want to encourage you to hit that check mark, hit the like button, make sure you subscribe so you'll be notified when we go live, or I put out little quick takes designed to just keep you informed and to give you an alternative perspective on things that you will not hear from the mainstream news. So definitely feel free to join us. I would love to connect with you often as I can. And so let me make sure everything is going on my end here, and then we'll get into some subjects. So as always, the goal is to give you the good news, the spiritually get you charged up in the morning and get you started on your day. Look at some market activity, and then we'll comb through the headlines, try to make sense of all the noise out here. So it's going to be a good morning to say the least, and I'm excited to connect as always. So just lots of stuff happening, man. Lots of stuff happening. And I have some couple headlines referring to activity outside of our country, because despite what we're being sold here, what's happening around the world is also something we're paying attention to, because those are some of the primary driving forces when it comes to gold and silver continuing to trend upward. And we ain't seen nothing yet because the monetary manipulators aren't done trying to control everything that they have destroyed. So it's going to be good. It's going to be good. So let's get right into the good news of the day. So today, August 29th, coming down the home stretch, heading into September. Let me zoom in here so you can see what I see. And then we will get started. As always, if you guys are encouraged or blessed by these little devotions, I encourage you to take it, share, so other people can get an idea as well as to what's going on here. Okay, so as you can see on the screen here, it says, trust brings blessing. Let me move this out the way here. It says, Psalm 40:4 says, quote, blessed is the man who makes the Lord his trust and does not respect the proud, nor such as turn aside to lies. Trust is the foundation of the kingdom. In the Old Testament, David recognized that blessing does not come from alliances with men, wealth, or power. It comes from putting confidence in Elohim, God himself. Jesus confirmed this in John 14:1 by saying, let not your heart be troubled. You believe in God, believe also in me. He was calling his disciples back to the same kingdom principle David declared. Trust is not optional. It is this currency of life with God. So when you trust him, you do not bow to fear, pride, or deception. You align with heaven's order. That alignment positions you for blessings because the king himself takes responsibility for your life. And the closing prayer is, Lord, I choose to place all of my trust in you. I thank you that blessing follows those who rely on your governing influence or your kingdom. In Jesus' mighty name, amen. Amen and amen. Hopefully that was something to get you charged up this morning, get your spirit man churning, and to be a blessing to you. That's what it's all about, to encourage and edify as always. Pass it forward. Let me get an amen in the chat if that resonates. Okay, so real quick here, let's get into some market activity. So as always, I have to point out just what is happening with gold and silver price-wise, because the spot price tells us more so the sentiment of the current investor realm, especially when information comes out from the mainstream news. And as of right now, something clearly shows us that confidence is not present in the current results given in reference to the PCE. So we got 39.15 as of right now and 34.34. And of course, gold, I've noticed a somewhat of a trend that I'm going to touch on as well. I'll just take you there instead of let me just get into this now. So I want to share with you a trend. So as you can see here, this is the gold price. This is for the last 2 years. We see the bigger trend is that no matter what happens, no matter what your politicians tells you, no matter what headlines on the news comes across as, gold is telling us that confidence is returning back to sound money. But what I notice and find the most interesting is if you look at the last 6 months, especially during this current administration, 47, I've noticed there's been four somewhat gold tops that has yet to really break through. And so as of now, this current environment could be the fifth unless it breaks. And I'm not a chart guy, a TA guy, but when you notice patterns, you have to recognize them. And so literally we have been flirting with continuous all-time highs. So going back to April 22nd, 3407, we have May 6th, 34.15. Then you come back to June 34.33. Then you go to July 34.29. And then here we are right now, 34.34. So literally the previous high was, according to this graph, 34.33. So we literally have set a new high, relatively speaking, according to this graph here. But this possibly could be the fifth top unless it goes past the 34-ish range and sets a new standard and then rises well beyond that. And so those are things that I think is worth paying attention to, because no matter what, gold has already told us who the winner will be. If you look over the last year, you can see that gold has chosen to expose itself as true, tried, and tested monetary mediums from the international standpoint. And nevertheless, just looking at the history, here go 10 years. So just looking at the last 10 years, you can see what's really winning and what's losing. And of course, the CPI narrative, all the inflation narrative, all these lies that we're being told, they're clearly being exposed by gold. Okay, so you see that. Now, what I find to be most interesting, as always, let me just maneuver around a little bit. What I find to be the most interesting, that as much as my crypto enthusiasts want to lump gold in the same category as Bitcoin, Bitcoin is not responding the same way right now. And once again, from a pure speculative standpoint, I realize that this bubble here will continue to grow because currency will find its way into it. No problem. I'll go along for the ride. But based upon current sentiment and global investment demand, right now, globally speaking, gold is in greater demand, while the Western Hemisphere, in particular the U.S., is trying to make this the new digital gold. And it will be, because, usually whatever the headlines tell us, that's what people tend to believe. But right now, if gold was really all that in a bag of chips, or Bitcoin was all that in a bag of chips, Bitcoin literally should be right there along with gold. And come September, if the Federal Reserve does not cut the way that some people are anticipating, it's going to get ugly, people. It's going to get really ugly. So as you can see right here on the screen, let me get myself out the way here so you can see what I see. Let me move myself over. All right. So as you can see on the screen here, we have some interesting stuff happening right now. So over the last literally hour, Bitcoin has gone from 110 to 108. So that's about a $2,000 drop-ish within the last hour. Within the last day, it's been about 5,000. Within the last week, it's been about 9,000. Within the last month, as we can see here, it's been close to 15-ish $1,000. And my question would be, if we have all this institutional demand and we have everybody named Mother creating a Treasury, Bitcoin Treasury company, how come the Bitcoin price isn't just shooting through the roof? Reason is they've figured out how to capture and control the actual supply and the demand side, which impacts the price, obviously. But they're doing all this for the sake of preparing themselves for when it really rallies, because it will rally. Bitcoin will go to highs that we can't imagine, because that's what it's designed for. Okay. But in the meantime, let's get back to reality. And as of right now, based upon the current PCE figures, we have the 10-year Treasury. It's also ticking upward as well, because there's not an overwhelming demand for U.S. liabilities, aka Treasuries. Our debt notes are not the most in demand. They're useful because the monetary framework relies upon these being the most liquid and readily available forms of reserves, currency, in a sense. But once again, here we got it's up right now, meaning that people are selling some. And clearly, with gold going up, we see where people are choosing to go rather than being forced to hold these things. Okay. With all that being said, and those are just some noticeable side effects from all this activity right here. And then let's just look at the S&P 500, which happens to be the focal point for economic health these days when it comes to investing. So as of right now, Magnificent 7 is a little bit in the red. So ending Friday in the red is not necessarily good for this narrative of economy's doing great, everything's fine, the Fed's going to cut. We'll see. Okay, so what exactly am I referring to? Let's get into it. So here we have key U.S. inflation gauge creeps higher, but not enough to stave off the Fed interest rate cut. So think about this headline. So this is from Market Watch. This is a primary news source that I'm sure a lot of people amongst the active investor as well as possibly the passive investors, those that just occasionally check their screens to see what's going on. When you see this headline, it's deceiving because we all know inflation or consumer price increases is not going away. And according to the PCE, which is what the Federal Reserve uses primarily, it's been trending up. But yet we still have the narrative of a Fed cut. The likelihood of them cutting, or it is irresponsible in my opinion, for them to ease in an environment where they haven't contained, because they can't, consumer price increases. And so literally the elasticity of currency is still a problem that they have to face. So imagine them actually cutting a quarter in a couple weeks, and then the month after that, PCE comes in at 3%, and then 3.1, and of course all these numbers are rigged to fit their narratives. But here you have a government telling the central bank to cut. At the same time, consumer prices in certain categories are being exposed for a lie. It's going to be hard. It's going to be hard to pull this off. That's why I'm saying that gold is exposing the central bank and the fiscal government's lies, obviously. And so just to zoom in here, this is what really caught my attention. It said core PCE index rises to 5-month high of just 2.9%. And so these small incremental increases is enough to really make your average person question the narratives. Because if it was so great, it should be going down consistently, not climbing up incrementally bit by bit. And so let's just look at this. So here we have another graph here giving you more insight. So here's U.S. core PCE price index year over year. And so this is what it looks like when you actually see the figures. So we had 21 through 22, 23. The anomaly this came about from 2 or 3 stimulus packages, stimmy checks, and all that other stuff. Then we went to the QT, the tightening phase, and so managed to bring it down to above 2.5. It looks like the lowest it got was 2.6. We got it down to 2.5-ish. So literally the range that they've been in, as you can see here, has been 2.5, 2.6. And so enter a new administration. So this is the Biden regime. This is all the Biden regime. Enter Donald Trump now. And so literally here's Donald Trump's first little report. 2.9, 2.7, 3.0, 2.7, 2.6, 2.8, 2.8, 2.9. So once again, based upon the last 5 months, I would expect, I'm not even a statistician, a math expert, but 5 months is enough to make me say that perhaps next month it could be at 3, give or take. Regardless, the whole narrative of cutting the federal funds rate is something that people should really question. And for me, the lesson to take away from all this is don't wait until a cut or not cut takes place, because if they don't, it's going to be a correction. If they do, it's going to be a pump. So the question is, what will they give us first? A crash that would then warrant a cut for the pump, or a cut which will then continue to increase the consumer prices and inflation, and then the pump. So they're going to inflate away the debt anyway. And the world obviously sniffs that, hence the idea of gold responding the way that it is. And so literally every fiat currency. So look, so let me just show you. This is the last 6 hours in gold prices. So the last 6 hours in gold prices tells us that the world is sniffing a major problem. So literally 3404 this early morning at 7 a.m. up until 3438 as of right now, 10:30ish. So just this type of movement as a result of the headlines of inflation is coming back. And so literally my whole thesis with this would be, my whole premise rather, would be continue to diversify, continue to allocate whatever discretionary income you have towards something that can shield you from fiat debasement. Because the CPI figures, the PCE, and all these metrics that they give us, all it represents is a diminishing of purchasing power, meaning it's going to cost more of these things that we work for and save in to acquire the things we need. That's all. And so the best way to counter that is to hold something that automatically is a recipient and absorbs all of the excess liquidity, i.e. Federal Reserve notes and digits, that the world is deciding to give back when they redeem those notes and get sound money, aka gold. So that's just a historical lesson. So once again, the message can never get old, because the reality is becoming clearer that gold is exposing the lies. And I'm going to show you how it's happening globally. So it's just not the U.S. Okay, but let's get to some other subjects here. So outside of these PCE numbers and everything like that, we obviously know, but the rest of the world is having some issues. So here we have Canadian economy contracts 1.6% in Q2 as tariffs hit. StatCan says. And so literally every nation is slowing down as a result of this trade war that Donald Trump has kicked off, disguised as making trade balance fair for the U.S. But fair for us means a disruption for other countries as well. So therefore, we're all in this together. We all are in a debt-based economy that depends upon somebody, I guess, taking the losses at the expense of other people. And of course, the losses are being spread out now. Therefore, central banks will be needed like never before to make up for some of the loose ends in this debt bubble explosion that will take place. So it says Canadian economy contracted in the second quarter under the weight of U.S. tariffs. That's what they're being told. Real gross domestic product declined 1.6% on an annualized basis in the second quarter, thanks to a sharp drop off in exports and business involvement. So literally, less goods leaving their country has resulted in less revenue coming in. And so the ability for their economy to continue to grow has ceased, and it's actually contracting. It says that's down from annualized growth to 2% in the first quarter. A figure that can revise down Friday from 2.2% originally. It says real GDP was also down on a per capita basis in the second quarter, swinging from a gain in the previous quarter. It says Donald Trump ramped up its tariffs against Canada and the world in the second quarter, particularly targeting steel, aluminum, and autos. And so where another nation slows down, it's only natural that their government will respond the same way that our government responds here, which is to intervene by more than likely issuing more debt to kind of subsidize some of the areas that's been impacted within society. And then that means the central bank will respond by having to cut rates as well to spur growth through debt. So it's the debt loop. Debt problems equals debt solutions, which will then lead to debt strategies, which will bring in more debt. And of course, you got credit, which is the overarching method that is being used here. But you get my drift. More credit that can't be repaid. Therefore, the Canadian dollar will suffer. Savers in the Canadian dollar will suffer. Therefore, gold price in Canadian dollars will have to go higher. And speaking of which, let's just take a look at that, because it's no good to just show you how bad fiat currencies right now are suffering, other than just to show you. So literally, here we have, in Canadian dollar terms, as you can see behind me, we have the Canadian dollar versus gold. So as of right now, 1 ounce of gold is $4,700 in Canadian dollars. So literally over the last month, the price of gold has become more expensive when priced in a debasing currency. Over the last year, it has cost the potential purchaser of an ounce of gold 39% more fiat Canadian dollars to acquire an ounce of gold. And if I invert this, you'll get a chance to see. So for those who have kept large stashes of Canadian dollars in fiat terms, the relative purchasing power that they would have in purchasing gold has depreciated by 28.45%. So a quarter of their potential purchasing power has vanished when it comes to the amount of notes they would need to purchase a single ounce of gold. And this is Canada, my friends. And so every currency on the planet is experiencing the same type of issues right now. Just so you know. Okay. But then that's Canada. Okay, let's go. Other issues, other interesting things worth touching on. Let me actually share some other things with you that caught my attention. So a lot of international stuff that I think is a good tail sign of what's happening here. So let me share this with you here. So I saw a headline that talked about Milei down in Argentina, because the mainstream headlines tells us that inflation is coming down and that poverty is this and that, and they're getting things in line. Austerity is kicking in, which means government slashes all types of benefits and things of that nature, and it ultimately the burden is passed on to the people. Harsher living conditions. And conditions obviously are harsh enough to where now Milei is not really all that popular in the streets. So it says, President Javier Milei attacked and barely escaped. He said he was forced to flee a campaign stop after being attacked. A crowd hurled rocks and yelled anti-government chants. Don't believe the fake propaganda. He's a Middle Eastern lover. And then it goes on. Just beneath this here, it talks about all the other things that Milei is a part of. But it says Argentina's poverty rate soars above 50% under Javier Milei. And so literally, it just shows, those flags that a part of who he's operating on behalf of. And it goes on just to give you some more very critical perspectives on Javier Milei. But the whole point is, let me get this out of the way here. The whole point is, So the whole point in that is Javier Milei is not too popular right now. Poverty is up because austerity kicked in. Therefore, more pain, economically speaking. And once again, just as a little side note, let me show you how much pain the Argentinian people, the average, not all, the average, because those down there who prefer to hold their wealth in dollars, they have done better than the average person. So let me share this with you here. So over the last year, the price of gold compared to pesos, gold has increased 91% in the last year. And now it costs 4.5 plus million Argentinian pesos for 1 ounce of gold. So last year at the same time, if someone would have taken, at that time, 2.3 million pesos, took your 2.3 million pesos, found somewhere, because gold is not readily available per se directly from bullion dealers and coin shops because they don't have that there. But go to a jeweler, get you an ounce, 2.3 would got you an ounce, give or take. You would have protected yourself with that 2.3, but then again, you would have doubled it ultimately because now it's 4.5. So that 4.5 would have been protection and opportunity to appreciate in your own local currency, giving you more buying power, ultimately speaking. And so this is what it looks like when it comes to how much value has been lost. And the fiat, half. If you were holding on to just Argentinian pesos and you decided now, I want to get out and go redeem those notes for gold, you've lost half the ability to get that note with that same currency. That's Argentina. Extreme case, but then again, something worth paying attention to. Okay, so I don't want to continue to bore you with, truth, with reality, but I got to tell you what's really happening out here. So this country's not doing too good. Okay, another country here I think that will probably be a catalyst in silver prices. So here, this is something that came across my radar. Saudi central bank reportedly takes historic stake in silver ETF. And so just to give you an idea of what's going on here, it says Saudi central bank has reportedly taken a significant position in the iShares Silver Trust ETF, according to market analysts, in what appears to be an unprecedented move by a central bank to gain silver exposure through an exchange-traded fund. The purchase, reportedly executed August 14th, represents a departure from traditional central bank strategies that have focused primarily on gold and foreign currencies. The Saudi Arabia Monetary Authority, which manages over $700 billion in foreign holdings, has not publicly disclosed the size of its position. And so here, this is originally reported from SRS Rocco, based upon a screen capture here that shows Saudi Arabia as a list of clients that has possession of what is iShares Silver Trust. So it says Saudi Central Bank has positioned themselves, according to this graph here, with 932,000 shares at $30 average price. And so one share of iShares is $30, which as of right now, spot price is $38. So that little difference there shows that they're wanting exposure out of sheer diversification, and more than likely, just from a fiat price appreciation side of things, that 30 can't remain, so it's going to go up. So you're literally protecting yourself. So by buying these shares and having exposure to the silver price, in a sense, protects you a little bit from having your currency just sitting stable or buying government debt, which you're sure to lose out on. And then here's a couple of the other companies here that also hold large chunks of silver shares. And so, without even knowing much about the story, the question is, why would Saudi Arabia decide to hold and get exposure to silver, apart from the fact that they have gold, they're doing gold transactions internationally with China, and they're part of the BRICS new infrastructure, so that they are linked into whatever the payment system and the metrics will end up being. And so to now bring silver into your portfolio as a nation lets me know that they're really working on some things behind the scenes. So if governments, especially those that are not in hook, line, and sync with the Western Hemisphere, are diversifying with gold, silver, they're building things, they're creating tangible assets there, that's something that we as small mom and pop type investors should notice. Look at the strategies. Once again, this is not financial advice, just monetary common sense. Look at what the big boys are doing. Figure out a strategy that works for you and try to mimic it as best you can in small increments according to what you can afford, realizing there's risk in anything. So there's risk in staying solely in these, and there's also minimum risk in getting physical, tangible, real, true, tried and tested wealth, i.e. gold. So once again, these are just some things that caught my attention, and I think they're worth paying attention to, because these are some headlines that you won't get nowhere else from this perspective in particular, because no matter what, this number is still climbing. And over the last month, it's gone up $550 billion. And so, regardless of the Doge and the tax cuts and tax savings and all the stuff that they're talking about doing, this number doesn't stop. So, therefore, the price of gold, let me give you the, go down over here, give you the gold. So here we have, as you can see, dollar to gold ratio now. So the dollars in circulation, that's probably the M2 I'm thinking of using, to gold ratio, the amount of gold mined out of the ground. As of right now, it's $9,161 per ounce. So you take all the supposed currency in dollar terms and the mineable gold per year. Right now, 1 ounce is $9,161. But you go back to 1913, when the Federal Reserve first started, literally an ounce was worth $26.80, give or take. And that's just, and now we have the dollar to gold ratio in 5 years is supposed to be 12,586 per ounce. And so here you got the paper to silver, paper contracts, 361 paper ounces, equivalent to 1 real ounce, meaning that there's 361 times more paper than there is actual ability to get 1 particular ounce. So literally that price is going to be something else as well. So these are some things that, you won't see these type of graphs being presented on Fox, CNN, MSNBC. You know what I'm saying? So once again, if you enjoy this, definitely show some love. Hit that like button right now. Take this, share it, subscribe so you can stay plugged in so you never miss an update rather. And if you want to get involved and be a distributor yourself in the metals game, then I want to encourage you to consider joining the silver team. So right here, you see this little silver chest here. If you go to mysilverteam.com, links in the description, you can start dollar cost averaging monthly into your silver stack. You can set up a whole infrastructure for yourself and then take your information and share it with others so others can be blessed by saving in silver and then helping other people save as well, and you earning in between, which allows you to even buy even more silver. So click the link, go to mysilverteam.com, get you plugged in, and definitely love to work with you. But other than that, that is all she wrote. Be blessed, be safe. See you later.